What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the Paysafe stock. A lot of things have been happening with Paysafe the past couple of weeks. The stock finally dropped below $9. I never thought that was going to happen, but I can tell you exactly why the stock finally pulled back under $9. Most importantly, we're going to look at what the big money is doing, because that's always going to be the first thing you want to look at when you're investing in a company. What is the big money doing? I'm going to be providing that exact information to you, and I'm going to show you guys why Paysafe is an amazing opportunity, and it looks like they are building the ground to be a monster company in the future. They are just getting their feet wet, and only if you feel this video gives you a better insight on the Paysafe stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's gonna be a lot of great information coming out. You don't want to miss it. Let's get into the video. All right, guys, Paysafe was a little bit green today, close to a 5% gain, but man, this one has been beaten down for over 6 months, guys. I mean, this stock, as you can see, this is the 6-month chart, a 6-month downtrend. It has literally held above $9, $10 the entire time, and it finally broke down under $9. And I'm going to show you guys exactly why this stock moved to the $8 range, and it's not necessarily as bad as you think. It's actually very positive when we take a look at what type of opportunities this company brings. So if we go over to Fintel on Paysafe, we can take a look at the institutional ownership. This is very, very important. Guys, institutional ownership is ridiculous on this stock. This is a massive company. 348 million institutional shares, guys, valued around $4 billion. I believe the market cap right now is literally $6 billion. So this is massively owned by institutions, and there is a reason why they are adding this stock aggressively. They are not impatient like the retail investors. They're going long on this company. So if we scroll down, I want to really look at, the top 4 holdings, the biggest institutional investors in this company, because I want to see exactly what they're doing. We have Third Point LLC, Canay, and Blackstone. I really want to look at these 3 institutional ownerships to see exactly what kind of moves they're doing. So looks like Blackstone owns around 123 million shares, Canay 49 million, and Third Point LLC. So Blackstone is the biggest holder of the entire company as far as institutional shares. And guys, they did sell a portion of their holdings on that earnings report. If we scroll down, we could take a look, and we have here Paysafe, a $1.5 billion investment. This is extremely large. As you can see here, the Paysafe stock. And if we scroll down, it looks like they sold 23% of the holdings. And guys, when you see how much, stock they had, that's the reason why this company went, from the 10, to the $8 range. They sold 20% of their stock. So why did they sell 23% of their holdings? Around 7 million shares. There is a reason why. So as you can see right here, this article was put back in 2020. Blackstone and CVC are said to have nearly tripled their money on Paysafe. If we scroll down, we can get a bigger understanding of what that exactly means. As you can see here, Paysafe will become a public company again because they went private, a long time ago. Blackstone and CVC acquired Paysafe in 2017, taking the payments processor private in a roughly $3.9 billion deal. Blackstone used its 7th global private equity fund, Blackstone Capital Partners, to invest in Paysafe. So understand that Blackstone, got in on Paysafe 4 years ago at $3.9 billion. When this stock, was around, that $10, $11 range, the company was valued around, maybe at $8 billion. So understand the company was valued around, $8 to $9 billion, right around that earnings report. So it looks like they just cashed in on a portion of their holdings, guys. They still have 80% of their holdings. It just looks like, it was a good time for them to cash out because the Q3 guidance was a little slow. And that's why a lot of people followed, specifically retail investors. I'm going to tell you right now, those other 2 institutional investors I'm going to show you, they did not sell out. Take a look right here, Canay Holdings, okay? 49 million shares, valued around $600 million. I have Canay Holdings right here. If we scroll down, Paysafe, 49 million shares, no change at all, 0% change, okay? So they are not selling out, guys. It was Blackstone cashing in from 4 years ago. They deserve, a little bit of a profit for holding a company that long. It looks like it was just a great time for them to cash in, 20% of their shares, but they had a massive holding on this, company. We're talking, over $2 to $3 billion. And last, guys, one of my favorites, Third Point LLC. This is Daniel Loeb, extremely bullish on SoFi stock as well. About a $500 million holding, 41 million shares. If we scroll down on Third Point LLC, we come across Paysafe right here. And there's one of my babies as well. SoFi is actually, he's even a little bit more bullish on SoFi, but let's get into Paysafe real quick. No change whatsoever. 0% change. A $13.69 price average right now. So Canay and Third Point LLC are not selling out. Just Blackstone had such a large investment in the company. It really, pushed the stock down. I don't believe it would have dropped that fast, but, we're in high volatility times, and it looks like retail investors really followed that holding on the earnings report. But guys, the thing about the earnings report is it was phenomenal. Guys, take a look at this. Paysafe reports second quarter 2021 results and reaffirms the entire 2021 outlook. Do you know how many SPAC stocks have completely slashed their outlook 75-80%, and their stocks dropped to $3-4 because they completely lied on their investor presentations? Guys, Paysafe told you back in 2020 they were going to give you 1.5 billion in revenue, and look at their guidance, guys. They are continuing to guide 1.52 to 1.5 billion in revenue. This company is just building the groundwork for the future years. Remember, this is a very painful year for Paysafe because they've had to exit so many of their legacy accounts that they've had for the past couple of years as a private company. They're rebuilding the company into an e-cash, iGaming, sports betting company, and that is why it's been a stressful year for the growth this year. They're building up their company and they're landing tons and tons of acquisitions that we're going to go over right now. And guys, just to give you a little summary, the second quarter, revenue increased 13% to $384 million. I can't even explain how many SPAC stocks are out there with no revenue, declining revenues. This is literally the top 3% of SPAC stocks when you're talking high quality. And look at the institutional investors putting some massive money on the table for this company. Understand some people right now are down 20, 30, 40%. I know it's painful, but even the big money is down on this one because Blackstone decided to exit a portion of the company along with, Q3 guidance slowdown, which is fine because I'm in for this company for the long haul. They're going to have a really good 2022 for sure. And on top of that, this company's doing 400 to 500 million in EBITDA, 120 million in EBITDA almost in a quarter. This is a massively large company, and they are profitable. They turned a couple cents profit the last quarter. They're building up their margins to have stronger profits in the future. It's just getting started right now. This company right now is in a rebuild. Just a week ago, Paysafe made an acquisition to acquire an e-commerce payment platform, SafetyPay. Founded in 2007, SafetyPay enables e-commerce transaction at over 180,000 cash collection points, primarily in 11 Latin America countries and Europe, serving almost 300 merchants in travel, entertainment, and digital goods. So guys, as you can see, they're trying to build up other segments of their business models, not just the iGaming, sports betting in the United States. They are targeting different payment transaction platforms. And as you can see, that's exactly what they're doing right now. A brand new acquisition on top of Latin America acquires Germany's Via Fintech, boosts its alternative banking payment solutions. By acquiring Via Fintech, Paysafe will gain the ability to grow more in Germany as well as create more revenue generating opportunities, being able to cross-sell Via Fintech's products for alternative banking solutions to merchants globally, according to the release. So guys, there you see it. They are expanding into Latin America, Germany. They're focused on all payment processing business segments, not just iGaming and sports betting, which is just getting started as well. We're talking under 20 states legal. So there you have it, guys. You can see exactly what Paysafe is doing. They are building up the company. They are restructuring their debt. They are making tons and tons of acquisitions this week. And you can see exactly what the big money institutional investors are doing. And only if you feel this video gave you a better insight on the Paysafe stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out. You don't want to miss it. I hope you have a great day.